Hi, this is Matthew Cratter from Trader University, and today I want to talk about how to find the best investments for 2020. If you're worried about this financial crisis, this bear market, or just want to see how I'm trading it and what kind of trading strategies work in a bear market as well as bull markets, be sure to hit that subscribe button. So, talking about how to find the best investments for 2020, let me tell you how people often react. When I put out a new video with an investment idea, people will say, I like it, I don't like it. And usually the best ideas will have a response something like, thanks, I hate it. Or, I just don't get it. Or, it's just kind of a weird idea. It's a weird idea. It doesn't fit into my previous mental framework. Now, when you see yourself responding like this, just something that is new, I want you to divide your brain in half. And I want you to observe yourself doing it because it can be a sign that you might really be onto something. And I can give you a couple examples. Back in August of 2019, I did a very extensive video, which you can see in the YouTube archives, about why I thought there was going to be a recession in 2020 and a bear market as well. Had nothing to do with the current pandemic, but had everything to do with the yield curve inverting. Similarly, early this year, I started putting out videos how to protect yourself from a stock market crash. I got a couple responses from people saying, ouch, you're an idiot, blah, blah, blah. And also here's another video from late 2019, why you should avoid ExxonMobil. Widely considered, your grandmother or grandfather's safe dividend stock, but I pointed out why it was very dangerous. And so what I want you to do is when you hear a new idea or you hear some sort of prediction about the future, I don't want you to reject it outright. And if you find yourself experiencing cognitive dissonance or feeling uncomfortable about it, you can know that you're in good company. It's okay to feel that way, but it might be an indication that it's a really good investment. Here's a great, there are lots of examples of this that I can multiply. Prominent article in Newsweek in 1995, Why the Internet Will Fail. I remember I graduated from college in 1993, and so I was very aware of the internet coming onto the scene. I was in Silicon Valley, and I was aware of the critiques of it, and I remember there really was a lot of doubt whether it would ever be anything big or just be a niche thing for geeks and nerds in Silicon Valley. Here's a famous 1995 prediction by an American astronomer named Clifford Stoll, who is quoted as saying, "The truth is no online database will replace your daily newspaper. No CD-ROM can take the place of a competent teacher, and no computer network will change the way government works." Obviously a smart guy because he's an astronomer, but just completely wrong. So the corollary to this is you've got to be very careful listening to experts, including me. But especially, I would encourage you, the main kind of experts you should avoid are the economists. Just in my experience, nothing against economists, but they usually make the worst predictions. The same goes for financial publications. This is the famous cover from Business Week back from August of 1979, which is very close to the bottom of the bear market, saying that the stock market is dead, equities are dead, how inflation is going to be around forever. This was basically when inflation ended, when a multi-year bear market ended, and equities proceed to go up for essentially the next 20 years. So you want to be very careful about financial experts and especially economists and journalists. Now, a lot of people think you can just, they start reading about Warren Buffett. They're like, oh, Coke, that makes a lot of sense. This is a really good idea. What people, especially beginning investors, don't realize is that the money's already been made in Coke. And when Buffett bought Coke back in 1988, he bought $1 billion worth of it. It was fairly widely criticized. What people were saying was he's ignoring his value investing strategy. He's overpaying for it. It looks like he paid. I'll link to this article, but he paid a 30% premium to earnings, a 50-cent premium to cash flows. He paid a fairly high PE for the time at which he was investing. And it wasn't really the sort of cigar butt company that he was used to investing in. And so at the time he did it just a few months after the stock market crash of 1987. People were fairly bearish on equities. And people also didn't like the investment because Coke had been going up it'd been going up every year for the last 5 years before he bought it. Now, what did Buffett see in Coke? Why was this a good investment? He saw that it was an addictive beverage, and that people who drank a lot of it. This was obviously back in the 80s. And he also looked at the global distribution of Coke and realized that at that point people were really just drinking it in Europe and Canada, the United States, maybe Mexico, and he realized this was going to become a worldwide product. So he invested in Coke not really as a value investor, but more as a growth investor. He was expecting Coca-Cola, to saturate the world. There were some other technical reasons. Coke was kind of divesting itself of some worthless investments. I think at some point it owned a zoo or amusement park. It had very bizarre investments, and it was beginning to buy back its own stock. But at the time that Buffett bought Coke, it seems very logical now, it was fairly controversial, and another sign that it can be a good investment. Here's a magazine cover from late 2008 talking about how we're entering a new depression. This is very close to the bottom of the great financial crisis. So another reminder to ignore magazine covers. Now I'll give you a piece from my own investing career. Here's a paper from the Center for Responsible Lending dated April 2012 talking about how the housing crisis was not over in California. There are still a lot of foreclosures, et cetera, et cetera. This was in the wake of the housing bubble popping. Now, I started investing in California real estate in late 2011 and most of 2012. And what I saw was that just California has great weather. It's got a great brand. There's a lot of jobs there, etc. And so you have to ignore the experts when it comes to this. And I remember when I was buying rental houses in California back then, so many people were very upset, including people in my family, saying, this is crazy. Why are you doing this? Housing's done, etc. So that's contrarian investing. And when you're doing it, you will begin to doubt yourself. And you shouldn't be a contrarian just to be a contrarian. But if you have fundamental valuation reasons or demographic reasons or some sort of economic reasons, it can make a lot of sense. This is just a chart of housing back then. You can see that housing bottomed in the Bay Area in the early 2011, 2012, and then just went straight up. This article says we're in another housing bubble in California. I'm not too sure of that, but just to give you an idea of where I remember in 2005, 2006, 2007, people were paying over $1 million for sort of mediocre homes in Sacramento and planning to commute to San Francisco for a job, which is a very long drive. But basically, people love the idea of buying houses in California here. I remember many people at work doing it, and they hated it down here. So again, if you're gonna make really good investment decisions, you have to learn to ignore the crowd, even the educated crowd, even the financial Wall Street crowd. So let's talk a little bit about some possible investments in 2020 and how we might think about them. Southwest Airlines is an interesting one. They're an airlines that I use a lot. And one thing that if you've never used them, you probably don't realize is that if you cancel your flight. So I had a lot of going into this pandemic. I travel a fair amount, and I had a lot of flights planned on Southwest. And once everything started shutting down and I realized how dangerous the virus was, I canceled all of my flights. Now, when you cancel a Southwest flight, there's no charge or anything. You basically get a credit against your account. And so now I have thousands of dollars of credits with Southwest, which I will use in the coming years. They expire at a certain point, but I imagine Southwest will extend this. So Southwest is basically, there's a bunch of revenue there that they've captured. They're sitting on my cash, and there's no way I can get it back, but I will just use it when I fly next time. And I imagine that's when they will actually recognize the revenue once I take a flight and once everyone gets back to flying, which will happen eventually. It might not happen in 2020 or even early 2021, but the airlines will be back. Southwest is a very well-run airline, very lean and mean, and not as affordable as they used to be, but still a pretty good deal. Now, the real question when you're investing in a crisis like this is the company going to be around? Is it going to survive the crisis? Because obviously a lot of stocks can get very cheap in a crisis, but as they always say, stocks can get very cheap right before they go to zero. So we want to make sure that this is a company that's still going to be around. So if we just go to Yahoo, we click on statistics, and we scroll down here, we can see some of the balance sheet information. And we can see that as of the most recent quarter, obviously this is all changing, and we'll see when they report earnings again. But as of the most recent quarter, they had about $4 billion in cash, and total debt, this would be long-term debt, about $4 billion in debt. So this is a fairly conservatively run company, unlike many of the legacy airlines. This is also a company that Warren Buffett owns, which is nice because he always likes to pull strings for his company. You can see one way to see that they don't have a lot of debt is you can compare the market cap to the enterprise value. Enterprise value just adjusts for debt and cash on the books. And you can see that the market cap and the enterprise value are very close to each other. You can also see that the current PE is quite low, below 10. Sometimes you can get very low PEs when there's peak earnings, so you have to be a little careful of this. But what one can do is just go and look at, figure out sort of what normalized earnings are for this company, and then use that to value the company. But I think this will be a fairly good multi-year investment. It could still go down 50% from here, and you really want to also dig down, read the 10K. But here's a sector that everyone hates and is very afraid of. It's unclear whether Southwest is going to get a bailout or not, or whether they even want a bailout. But here's a company that looks like it will survive and maybe gets a lot cheaper, but this might be a good multi-year holding. Again, none of this is investment advice, just teaching you sort of a framework you can use to pick your own investments. A lot of people have been asking me about the cruise lines as well as the airlines. So let's do a similar analysis of Carnival Cruise. CCL is the ticker. If we just go to Yahoo, click on statistics, Yahoo Finance. If you look here, you can see the market cap is about $12.5 billion. Enterprise value, which adjusts for debt and cash on the balance sheet, is almost double that, close to $24 billion. And if we scroll down here, we can see why this is. They currently, as of the most recent quarter, not a huge cash cushion, $518 million, and total debt of $11 billion. So their debt of $11 billion and a market cap, which is the value of the company, of $12 billion, they almost have as much debt as they do market cap. This is a highly levered company whose revenues have completely disappeared. You'd have to go and dig a little deeper in their financial statements and see exactly who they owe money to and when it's due. But this is a company that's obviously trading with a fair amount of distress. If it survives, it could go up 4 or 5x from here. I'm not convinced that it will survive. Cruises, many of them are they fly under foreign flags like Liberia or some of the Caribbean islands, and as a result, they basically portray themselves as not being American companies for tax purposes, and so it's very difficult to convince the American taxpayer that you should bail out some wealthy cruise ship owners who don't even pay U.S. taxes, who have everything offshore. So this would be a good contrast to Southwest as an example of one that it's extremely cheap. You can see their PE is trailing PE of 4, forward PE of 4 or 5. This is just a forward PE of 5 corresponds to an earnings yield of about 20%. So you can just take 1 over the PE, and that gives you that. So basically, if you buy Carnival and it survives, your return on investment, just thinking of it in terms of earnings yield, even though it doesn't get paid out to you, is about 20% a year. So that's absolutely amazing. You more than double your investment after 5 years. But again, this is one that I personally, I'm fairly agnostic about it. I certainly wouldn't own it, because what could happen here is the debt holders would just take over the company. They would liquidate the current equity holders, which are the people who own the shares. The stock would basically go to zero, and then the bond holders would become the new owners of the company. That's basically what the simplified version of what happens in a bankruptcy filing. So this was just more news about whether it looks like Southwest is already trimming their staff in an effort to stay solvent and to survive the crisis. So what other investments might we look at? And one way to do it is we can look at the Berkshire Hathaway letter, and I'll link to this in the description notes below. This is where Buffett links all his biggest holdings. It's kind of interesting to see because especially you can look up the cost, what he paid for it. And so if then the current market value as of 12 December 2019. So a lot of these are a little bit outdated, but you can see basically you can go back and you can figure out, you know, for example, in Southwest, you know how many shares he owns, about 46 million. You know his cost basis, which is 1.94 billion. You can calculate the price that Warren Buffett paid per share for Southwest Airlines. He's probably buying more now. And then you can see if you can get a better price on Southwest than he did. That's one way to do it. You can go through here and look at all here his different investments. Obviously, Coca-Cola Company here, Apple, etc. And that's an interesting game to play. See if you can get a better price on a stock than Buffett has. So I'll link to this in the description notes below. Now let's talk about some other investments for 2020. Here's a Paul Krugman quote I wanted to show you guys. Here's his famous quote about the internet. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. Paul Krugman is not someone you should listen to when investing in anything. And in many ways, you should do the opposite of what he says. He's obviously a smart guy. He's got a Nobel Prize in economics. Economics is sort of a pseudoscience, in my opinion, so you got to take it with a grain of salt. Paul Krugman is also very famous for hating Bitcoin. He's written various. He wrote a big article for the New York Times that's behind the paywall called "The Long CryptoCon" back in 2014, back when Bitcoin was 330, saying that it was a scam, that it was going to become worthless, etc. And he really has a history of this. He did this again back in 2018, talking about how Bitcoin is going to experience a total collapse. Here's his various articles in the New York Times and elsewhere about how evil Bitcoin is. Peter Schiff is another one, another economist who likes gold, which I agree with him on that, but has been bearish on Bitcoin really since it was just a few dollars per Bitcoin, calling it a bubble, calling it a tulip, etc. So Schiff is another guy that it's a good idea to do the opposite of. Just more contrarian investing. Obviously, marijuana stocks did really well in 2017, and the years preceding that, people were looking forward to legalization. They realized that various states in the U.S. had already legalized pot, and other states were moving towards it, and Canada was moving towards national legalization. I believe that pot stocks reached their tops roughly around when Canada legalized marijuana at the national level. So this is how the stock market works. It anticipates what's going to happen in advance. And then you'll often see headlines about, for example, wow, Canada just legalized pot, and you'll think, oh, now's the time to buy. This is great news. It can be, but what it more often means is that the news is already priced in. And that's why you'll hear the expression, buy the rumor, sell the news. And so in late 2017, early 2018, we were just getting so many articles. I was getting so many questions from viewers and subscribers saying, should I buy this pot stock or that pot stock? Now, pot is basically, it's a commodity. It's called weed for a reason. It grows like a weed. It should be trading, at least the growers, it should be trading like a commodity, like corn or wheat or something like that. But a lot of these stocks were priced for perfection. And you can see here's Aurora Cannabis, peaked in early 2018, had another peak in the fourth quarter of 2018, and has just collapsed, call it more than 90%. So when you hear an investment idea that sounds weird, I remember people talking about investing in pot in 2010, 2011, 2012. And I remember at the time I did not like the idea because I thought that, well, what if the federal government just comes in and shuts everyone down and arrests everyone? And at that point, it still seemed like that could be a possibility. The really smart money, including people like Peter Thiel, whom I know were investing in it back then. And so this was a good example where I should have examined how my own mind works, and I should have said, why am I so, you can obviously have moral reasons against investing in marijuana stocks or tobacco stocks or alcohol stocks or whatever, but from a purely business perspective, they were not priced, legalization was not priced in. And then once legalization became apparent, all these stocks had already peaked and were on their way down. So you've got to, I like the Wayne Gretzky quote, you've got to skate not to where the puck is, but to where it's going to be. And cannabis stocks, pot stocks was a great example of that, where you had to be ahead of the curve and then you had to get out as things were getting priced in, beginning to get priced in. Right now, I think a great investment for 2020 would be Bitcoin. Now, I've done a bunch of videos about Bitcoin, and if you read the comments, if you go back and check them out on YouTube, you'll just see a lot of people saying it's not gold, it's a fraud, it's a bubble, I'd rather sell you some tulips, it's magical internet money, etc. And this was my gut reaction when I first encountered Bitcoin. In fact, I encountered it many times throughout the years and rejected it each time before I finally got really interested in it late last year. But this is another example, just like cannabis stocks, just like buying housing, buying rental houses in California in the 2010, 2011, 2012. If you see a video that I've done on Bitcoin and you have this reaction like, it's weird, I don't understand it, it's just digital money, it's not backed by anything, it's not sanctioned by any government, this can be a sign, this sort of cognitive dissonance should wake you up, especially after having watched this video and realizing that to make the really big money, you have to be ahead of the curve. And you have to invest in things that seem weird, like the internet seemed quite weird in 95 or 96. I remember going on AOL very early on, and it was cool, but it was just hard to see. It was very slow, it was expensive. You had to wait forever for graphics to load. The internet seemed weird. I remember when Peter Thiel told me to invest in Facebook and social media companies, and I didn't really get it. It seemed like a very bizarre thing. It seemed like just a giant group chat room, and I wondered how that could work. But he was very aware of network effects and the fact that people wanted to have real life personas online. Before that, everyone was hiding behind an avatar. There were really no real people on the internet except for famous people. And so Peter was obviously ahead of the curve on Facebook, on cannabis stocks. And another investment that he's liked over the years, I don't know, I can't speak for him right now, is Bitcoin. And so when you see yourself having that gut reaction, like Bitcoin is weird, I just don't get it, I think I'm just going to buy Coke and collect the dividend instead, which is fine. It might be fine if you're retired and you want current income, etc., and you want a very conservative investment. Then you should sort of back off and look at yourself and say, why do I have this gut reaction against Bitcoin? Is there something I'm missing? It sounds weird, but maybe I should investigate it exactly for that reason. And this is how you find the best investments, doing something like this. So if you want to learn a little bit more about Bitcoin, I can give you some free resources. I'll link to this. This is a great article on how to value Bitcoin, which is obviously a very difficult thing to do. The reason I like Bitcoin so much at this point in time is we're having something called the halving that's going to happen in early to mid-May. And when this happens, it's going to be the equivalent. Let's say someone told you that in a couple months from now, half of the world's gold mines would be closing. In other words, the coming supply of gold would be cut in half simply because half the mines would be shutting down. You might get interested and say, wow, there could be a real gold shortage here. If gold demand stays constant and supply gets cut in half, that would imply that gold can move up quite a bit. And we have a similar situation with Bitcoin, where we have this financial crisis, ongoing pandemic, the government printing trillions of dollars, the central banks printing trillions and trillions of dollars worldwide, especially in the US. And this money will find its way into things like Bitcoin, which are a good, stable store of value over the long term. If they work, Bitcoin could still somehow fail. I don't think it's very likely. But there's going to be tremendous coming demand for this. Bitcoin is something that Generation Z and the millennials like. They're not interested in gold. Gold is more of a silent generation, boomer, maybe even Gen X, which is what I am, thing. But I can tell you that my kids and their friends all know about Bitcoin, have no interest in gold whatsoever. So as a form of digital gold, I think Bitcoin is very, very interesting. And so this combination of central bank money printing and the coming halving, when the supply of Bitcoin is going to be radically changed. If you go, I'll link to this dashboard here, but it's a nice dashboard that shows you that 87% of all the Bitcoin that are ever going to be made or mined have been made. And so this is a very, very scarce asset. And it's something that will do well in sort of stagflationary times with a lot of money printing, the US dollar being devalued. Now it's weird. A lot of people don't know how to buy it. They don't know how to store it. They're worried that it's just sort of a paper fantasy or a digital fantasy. But after watching this video, again, you should be aware that when you have that reaction, maybe you should dig a little bit deeper. Now, you still need to do your fundamental research and make sure that it's not a scam. Obviously, there's lots of weird crypto available online. I only like Bitcoin. I believe you should just completely ignore all the other cryptocurrencies. Now, if you found this video helpful and you want to learn more about Bitcoin or just learn more about my trading strategies, I have a bunch of online courses, and now is really a great time, especially if you're stuck at home and you've got a lot of free time and you'd like to, rather than just binging on Netflix, you'd like to use this time to really increase your skills, whether it's playing guitar or learning photography or learning how to invest and trade. And so Follow My Crypto Investments would be a great course on here. Bear market trading strategies, futures trading, financial statement analysis, if you want to get a better idea what I was talking about there with Carnival Cruise and Southwest, as well as my two flagship courses, Learn to Trade Stocks Like a Pro and Learn to Trade Options Like a Pro. Now, the good thing about Trader University is when you join, you get access to all 12, 13 courses, and I'm constantly adding new lectures and new courses. So a 30-day tuition payment will get you access to everything, and you can even follow along and watch me buy Bitcoin in my actual trading account in this course. So if this is something that interests you, you can just scroll down. I'll put a link in the description notes below. You're going to click right here where it says Get It Now. Now, normally 30 days access is just $125, no long-term contracts or anything like that. So you can cancel, you can watch all the courses in the first 30 days, cancel, and you won't be charged again. But I know these are tough financial times, and so I wanted to give you guys all a deal. Instead of just being $125 for 30 days access, if you basically you click on Get It Now, it'll take you to this page. You scroll down right here where it says have a coupon code and type in YT99. Click Update, and that will get you a price of just $99 for 30 days access. Again, no long-term contracts. You can cancel at any time. You can sign up, watch every course over the next month, and then cancel. So if that's something that interests you, be sure to do it. And let me know your comments in the section below if you have any questions or suggestions for the next video. And also hit that subscribe button and like button if you found this video helpful. Hope you're all staying well, doing well, staying sane, and I'll see you in the next video.